Hello, my name is Peter Darsky. I'm the director of Mid-America Lenders, and I am going to talk about the conventional loans now. Hopefully you watched other segment or will watch other segment about the FHA loans, and that will help you understand what is the process of decision whether to go towards FHA or conventional loan process. So when we think about conventional loans, we have to decide based on benefits and some drawbacks. One of the most important benefits of conventional loans that you can also purchase a house with 3 or 5% down payment. Especially if you're a first-time home buyer, there's very few adjustments to the rate for the lower down payment, but typically 5% down payment is what you should do on the conventional loan. Also, a thing that you have to consider is that the conventional loan, you should be a little bit better established when it comes to a credit history. So when we pull your credit, your credit score should be at least 680 FICO points. A benefit of a conventional loan also includes wide variety and wide range of amortization and programs. You can do it for 30, 25, 15 or 10 years. There's also 7-year ARM, 5-1 ARM, 3-1 ARM programs, which give you a fixed period for 3 years, 5 years, or 7 years, depending on a type of ARM. And then it just adjusts basically to the market conditions. So you have a lot of different programs. Another benefit of conventional loan comparing it to FHA is that typically you have a higher loan amounts available. Conventional loans for 2017 had a limit of 422,100 for single family residents. For FHA it was 360,000. So conventional loans give you a little bit more buying power after the down payment that you're planning to put. You can use conventional loan for primary residence just as well as investment property. FHA typically or actually only allow you to purchase a primary residence. You cannot use FHA financing for FHA loans. So primary residence, vacation homes is what you can pretty much use your conventional loan for. Another benefit of conventional loans that if you put 5% down payment or 3% down payment, you know you have a mortgage insurance. So that mortgage insurance comes off by itself through your regular process of payment making at 78% of loan to value. So after some time when your loan's gonna reach 78%, there's no need to refinance. The PMI or primary mortgage insurance comes off by itself. Of course you can do it sooner if you invested some money into a house and you feel like it's worth more money, or perhaps the area just went up. You can use that and you can refinance the property sooner, improve your rate and term, or maybe pull some cash out of the house if you need it. You can do all these options for conventional loan. Also, another benefit of conventional loan is that unlike on FHA, when you're trying to purchase a condominium, and in some cases townhomes, the association that runs a project, condominium project or townhouse project, they basically will accept every conventional loan. When it comes to FHA financing, associations tend to be picky and they don't always allow FHA financing. So in essence, those are the analysis that we do for you that will help you decide, and help us to help you put this deal together. But this is the process, the thought process that we're doing every single time when we analyze your situation and the contract, the property situation, all that. There are also some drawbacks of conventional loan, and I would say typically if your credit score is in a range of 679 FICO points and less, like up to maybe 660, this is the range where you should actually apply for an FHA loan, because there's more and more adjustments to the rate as your score goes lower, and you might be required to put more down payment. So also on conventional loans comparing to FHA, your rate's going to be slightly higher. It could be about 1/4%, maybe 0.5%, depending on the situation. So it is a little bit higher than FHA, but then FHA always has mortgage insurance, so it's kind of it balances out. And final consideration when it comes to when it comes to conventional loans is that your income to debt ratio is a little bit more conservative than FHA. So after you calculate your proposed mortgage along with the property insurance, homeowners insurance, and possible mortgage insurance, or even possible homeowners association, when this is all added to your other debt like car loans, student loans, or credit card payments, typically your income to debt ratio cannot go past 45%, and it is based on the monthly income, monthly debt calculation. So how we do that, we basically take your monthly gross income, which could be, let's say, $10,000, and you should fit with all other expenses which I just mentioned, including the proposed home and all other expenses attached to it, like property insurance, homeowners insurance, mortgage insurance, and association if you have some, and should not exceed 45%. So basically, if you make $10,000, your max debt should be about $4,500 monthly. Can we go past 4,500 monthly in that income situation, or go past 45%? Yes, we can. I've seen applications being approved at even 50%, but that depends on other compensating factors such as stability on the job. You've been on the same job for 10, 20 years, or you have significant savings that even after you close and you put, good down payment, you still have, let's say, 12 months reserves for the payment on your mortgage and other housing related expenses. So that could help us approve application even at 50% debt to income ratio on conventional loans. But it is still lower than FHA loan, which allows up to 55% debt to income ratio. So I would say those are the most significant information. This is the most significant information about the conventional loan, and we will always review your documentation. We'll review the contract, the whole picture, and we'll inform you which is the right type for loan for you. But thanks to these videos for conventional FHA, I hope you will see what is the thought process that we're actually doing on every application. Hope that helps. Thank you very much, and please watch my other videos.